Hey folks, how you doing? Chris here. Let's do the trade review for today. There's a few things you might be able to learn from this video. So let's take a look. So Tesla, first thing, this was the pre-market range. So the low was 695 and approximately the middle part of that was about 730s, 733. So just before market open, it hit a low of 690. So that was actually our pre-market low we were watching. So we initially held that with this big trading range here, held it 687 and then tried to move higher and break the high of the day. So I tried to scalp this based on the break of the high of the day. My mistake was entering too late. Once again, I think I entered, let's look at the fill there, 710. Yeah, way. I entered right at the top. Horrible, horrible fill, in fact. So this is the type of trade where you see momentum building in that direction. I think it works better to front run the trade than to expect a breakout. And this happens a lot. I think this is going to continue to happen in the markets. As breakouts tend to fail, you need to get used to front running these breakouts more than trading the breakouts themselves. Breakouts only work when there's like everybody watching them at the same time and it's just such a clear break, anyhow. So I traded it long there and that was a loss because we barely were able to hold. I think I might have, no, I didn't even take a partial there, but I was briefly in profit and then I ended up stopping out right there on that break. Okay, so at this point we moved lower, tried to break the high of the day, and now we're moving lower to test the low again. So at this point I said it's likely to take a short here just as another scalp, and I'll expect the low of the day to hold initially. So that's exactly what I did, and I was covering. Now the problem with that trade is that I covered in too small, my increments were too small. So I shorted pretty big there, and then I was covering in tenths of the position. And this is the type of trade that would have required me to cover half the position real fast, or more, like 75% of it. Because again, with these scalp type of trades, you got to be nimble and know how much of your position you need to be scaling in or scaling out at any given time, okay? So the next trade after, well, so there was one more long trade in here that I took that was another scalp. And this one actually was the worst of all of them because I don't even know why I took this trade. I think I took a break above this because we saw it test the low, green bar, most likely going to try and hit higher now. But at this point, see, because we're in sort of an equilibrium, the opportunity, there's a lack of opportunity in my opinion at this point. So I just scalped it a third time and then I realized, what am I doing here? There's a lack of opportunity in this market till we see a break in either direction. So that's what I said. I said it to my group chat. I said, guys, wait for the break in either direction because right now there's no opportunity in this market. So if you waited a bit, you can see that we established this sort of range here and then that was it. So the break above the high of the day here. Now, how many people are watching Tesla in the last week or so? A lot, okay? Millions and millions of people. So when people see this kind of trading range being established, consolidation here, break above the high of the day, the FOMO kicks in and people just start, it's the euphoria panic buy type of thing, right? So it makes sense to take a long there, in fact. So that was it. That was the clear break on Tesla. We got the break and look how much follow through this thing got. Unbelievable, right? So I entered here on the break right at 715 approximately was the fill I got. And then I was slowly scaling out. And this was the type of trade that is best to slowly scale out and not take off like half in one shot, because when you get a break like that, you get the euphoria start to kick in. The late traders, all the chat room guys that are looking at this, each of them are buying, and it creates this cycle of euphoria that sends this market straight to the moon. On top of that, any shorts are panicking. So it's just a euphoria cycle. We've seen this all the time. So yeah, taking small profits as it's going up, very important. And that was pretty much it. I was out here, out of the entire position. Now, okay, now the next trade, this one's pretty cool too. So I decided to play a counter trend because I saw how extended this move got. And we saw a nice top there, 770. We saw a big red trading range. So I said, okay, any break below this red bar on the 2-minute time frame, I'm going to take a short there and have a stop, pretty wide stop, I guess. And that trade worked quite well. As you can see, below that bar, we had nice follow through down to the 12 exponential. It took a little bit of time, but we got to that 12 exponential, and as I shorted it right here. Let's see, and then I was covering a little bit more. Actually, I covered quite early. I covered before we hit the 12 exponential because I was watching this price action just chop around, and it wasn't proving to me that the bears were going to have enough strength to do this. But even though I knew it was quite likely that we were going to test the 12 EMA, I just decided I wanted to lock in my profits. That's it. So there's a successful counter trend trade for you after an extended move. And that was it. That's all I traded on Tesla today. Okay, let's keep going. So this stock had earnings today, PTON, and I was watching because it had a huge gap down. And so we established a trading range first thing, down, up, down, break the low of the day, and I shorted it on the break of the low of the day. Because these stocks with earnings, when a stock has earnings, there tends to be some panic associated with people having positions. So I wanted to play the panic. So I shorted it here, knowing that I was going to place my stop above the high of the day. So it didn't get any follow through, moved up, and I was watching what the price was going to do around here. And we got one of these bear entries right here where you get upper wick and then a bear break below the previous candle. And I shorted it again there. So I added to the position, bringing up my cost basis and in turn adding risk to the trade and keeping my stop above the high of the day. Okay. And again, we tried to break lower, we're unable to, and then I decided to cover here after approximately 8 or so bars of just sideways price action. And I saw this volume coming in here and I said, you know what, the hell with this. I don't like this setup anymore. I'm going to wait for a better setup. So that was it. The market told me that the odds were no longer in my favor. So I said, I'm out, done. Okay, so tiny loss on that one. Roku had a nice move in the morning. Check this one out. So I missed this move entirely. Now, if we look, this was yesterday's price range, and we tried to move lower, held, and then once we held the low of yesterday, 125, there was a massive squeeze that went way up until about this level, which was the level that we went short below yesterday. So I'll just mark that in real quick, and you can see that it was approximately 128.43-ish. Okay, so I didn't catch this move initially, but if I saw this happening, I would have likely taken a break above this price on Roku. Well, really the long entry was down here. Let's be honest. It was on the hold of 125. So came up, extended move, and again I'm looking to play the fade on Roku. So first bear break, I'm shorting it. So there you go. You can see right there, 2-minute time frame. Bear, and then first close below the 4 EMA, I was shorting it. So my fill was 127.70. Pretty decent fill, not so bad. Probably was just below 128, you had to short it. So I was short there, anticipating that this was going to be our top, temporary top, but my stop loss was going to be above 129, approximately 129.15 or 129.20 maximum, okay? Now let's look at what happened after that. The volume kind of dropped off and we did grind higher, broke above 129, but got no follow through. So this is an example of a failed breakout. And once I saw this next bar form, that was my cue to short more, because that's a clear fake breakout, and shorting more, bringing up my cost basis slightly again. And that's just a big red flag for the bulls. You know, bulls trying to buy this breakout on a second wave higher, but the market wasn't confirming that if you were watching SPY at the same time. So yeah, failed breakout, and then it chopped around more, and at that point it just really went sideways. Okay, so now let's zoom out and you can see we've established this sort of trading range here. Now anyone who went long here, as soon as it breaks below 127.50, most likely those longs are going to start saying, I'm out, I'm covering, I'm selling, right? So we got an initial test, and again, that sparked me to short a little bit more there, right there on that initial test, but we didn't get the close below it. So I'm trying to be nimble with Roku in the sense that, because once this thing starts moving, it moves, you know, so you got to be ready to get in. So that one kind of faked me out in the sense that it broke and then it kind of came back up. So it's like it's playing with your feelings a bit. But again, we work with what the market gives us, not with what we feel. And then you see, there you go, there you got the break. So then the level we're watching is 127.50 at this point, because this is the low of this entire trading range, and we're watching this because we're watching Roku fade, and it tends to fade quite often, especially when there's a lack of demand in the stock. So lack of demand here signals a red flag for the bulls, and once they start getting these breaks, shorts take advantage of it, and it just gets taken advantage of. Roku has just been getting taken advantage of in general, any opportunity it gets. All right, take a look at where I covered. Right on a candle with a higher close right there. So 127.20. I covered a little bit, not the whole position. We faded more. Oh, and then we got the break above 127.50. And at that point, I covered the entire position for a small win. So that's what I got, and I took what the market gave me, and that was it. Okay, finished. So now at this point, I think I got distracted. My mom called me on the phone or something, and I placed a buy trade there after 127.50, and I ended up exiting for a tiny loss. So that was just a stupid thing. So it just goes to show you, once you're distracted, how you can easily make dumb decisions. So again, shorting these failed breakouts on Roku, shorting into the fade essentially, and scaling in, very important. I think that's it, guys. I'm gonna end this video there. I did take a trade on Facebook briefly as it tried to get above 210.60 and then 211. But as I saw this sideways price action, I decided to liquidate that. So it was really a small loss. So buy at just about 211, and I saw this sideways price action, and I sold right here just for a tiny loss, because I wasn't seeing no follow through. It was literally just going sideways for 10 minutes straight. Not worth it. Right, look at this. Absolutely horrible. Red flag. So there you go, guys. So I hope you learned something from this video, if there's any points I made. So executions on Tesla, not fast enough. Scalps, I had to take off more size quicker on those scalps. Now the big break we got above 712, that one had a lot of clarity, and in my opinion, that was the moment where you wanted to size up on the trade a little bit. Roku, so I missed the initial move. That's not a big deal. Played this fade and scaled in short, and the important part of that trade was that I kept my stop above the even number, high enough that even if we broke the high of the day and got no follow through, my thesis of being short would still be valid. Okay, remember, market makers love even numbers, and they love trapping traders in either direction too. So be nimble and keep your eyes on whatever it is. Okay, bye.